This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And as you can tell by the tie, it was USDA day. A lot of bearish pessimism coming into this report following the previous USDA report, which was a big bearish surprise. The fact that we were able to rally off of today's bearish report is a little bit of a silver lining here in the very near term. Perhaps we saw that bearish sentiment a little bit too baked into the cake. Obviously, we got some money flow from the soybeans and wheat that helped propel corn a little bit higher. But if we continue to see the corn market flow higher, I think we could take out overhead resistance. The resistance pocket we're looking at 447.5 to 454. This is a big pocket, a little bit wider than we typically like, but very significant. If we fail against here, this could potentially confirm a head and shoulders bearish pattern, but a breakout above here as we head into the next USDA report next month, which will be probably a little bit more important. If we're able to break out above here before then, I wouldn't be surprised to see additional momentum carry this market and a potential retest of the recent contract highs. Obviously, a lot of variables here as far as weather goes over the next several weeks, but still fairly optimistic on that corn price. Now, as far as the soybeans are concerned, we're pretty optimistic there as well. Very upbeat. The fact that we were able to hold that psychologically significant $9 handle earlier in the week was very impressive. We rallied off that good as far as money flow goes. 915, a big line in the sand for us here. That's the 50% retracement, or basically the middle of the range from the recent contract highs to the contract lows. If we're able to get a conviction close and consecutive closes out above here, I wouldn't be surprised to see an additional 30 to 35 cents in this market take us a little bit closer towards that 950 level. Wrapping things up with the wheat market. Wheat, the big leader and the big surprise here today, really surging higher, but coming up against technical resistance. 525 to 530 is going to be a big pocket for that Chicago contract. We're still not necessarily sold on being overly bullish. The wheat market, something that we've been looking at over the past couple sessions, and something you should take a look at, or at least put on the radar, is that Kansas City-Chicago spread. That'd be buying the Kansas City, selling the Chicago, looking for that spread to narrow a little bit. We're looking at it earlier in the week, about 57 cents. So something to keep an eye on there as we look towards the end of the week. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with Blue Line Futures from the floor of the CME.